So good afternoon, everyone. Welcome to our Lunch and Learn session on Mastering the Basics of Accounting and Entrepreneur's Guide. Why is it important for you to know your numbers? Before we dive in, let's take a moment to appreciate the fact that you're all here today investing in your financial knowledge. So give yourself some heart emojis, please. Come on, let's give some heart emojis. So you're tapping yourself on the back and saying, I showed up. Also, let's thank Karen for her vision for organizing this Lunch and Learn. I know it is your lunchtime, and I promise I will not keep you beyond your allotted time today. But if you stay until the end, I have a gift for you. Today, we will be exploring the fundamentals of accounting and why that is so important for every entrepreneur. It is so important for you to know your numbers so that you can make effective decisions for your business. However, I do not expect you to know everything about accounting. This is just a basic introduction so that when you have your conversations with your financial person, you can really understand and digest what is it they're saying to you instead of having that glazed over look that so many entrepreneurs usually have on their faces when it comes time for speaking about your numbers. My name is Sharon Eason, and I'm a certified public accountant with over 25 years of experience. I am the managing director at Chase Eason and Associates, and God is my CEO. Now, I'd like to start with a quick poll. Raise your hand in the chat if you feel confident in understanding how to read your business financial statements. Come on, let's see who's raising their hands. Okay.
I got to figure out how to raise my hand.
The motions on the bottom of the screen, it says you can raise your hand or just raise your hand physically. That works too.
I forgot because I don't have myself on the screen. So I'm like, oh yeah.
Yes, I can see you though. I can see everyone on the screen. Okay, if you raise your hand, if you feel like you know some, but there's room for improvement.
Oh yeah,
Awesome. Great. No matter where you're starting from today, today's session will provide valuable insights and practical tips that you can apply to your business immediately. So let's get started with our financial statements overview. First, we'll start with the balance sheet. Picture the balance sheet as a snapshot of your company's financial position at a specific point in time. It's like taking a selfie of your business finances. And we all know about selfies because we all love to take selfies, right?
Mm-hmm.
Okay, so then here is what a real balance sheet would look like. You have your assets, your liabilities, and your owner's equity. So I'll go into a little further in depth of what this is. So the components of the balance sheets are three. As I showed you here, it's the asset. The asset is what you own. These are the things you own in your business. Then we have our liabilities is what do I owe? And of course, then there's a little section at the very bottom of your assets and your liabilities that's called equity, or some people say owner's equity, depending on the entity structure that you have in your business. And the equity is generally your assets, which is equal to your liabilities plus your equity. So if you add your liabilities and your equity, that should equal your asset. And that's why it's called a balance sheet, because this side has to balance with that side. And balance sheets are generally used for decision-making purposes. Okay? Now we'll move on to the profit and loss statement, or some might say it's a P&L statement, some say it's an income statement, but the best definition is profit and loss because it shows both your profit and it does show your loss. And the profit and loss statement is like your business report card, showing how well your business is performing at a specific period in time. When the balance sheet is from when your company starts until you no longer have that company, your income statement is just for your reporting year. Most people have a calendar year reporting. So your income statement will show the activities, the ins and out of your business from January through December if you're on a calendar year. Fair enough? Any questions so far? Okay, here's a snapshot of what a P&L statement would look like. It has your revenue coming in, your expenses, and then your net income or your net loss, depending on how well your business is doing. And in more detail, your operating I'm sorry, this is the cash flow. Let's go back. I think I missed one of the slides. I jumped all the way over. My apologies. So the components of your profit and loss is your revenue, as I showed you in the example earlier. And your revenue, when you think of revenue, think of your earned income. I sold something and I got money in return for it, or I performed a service and I got money in return for it. Income and revenue are terms that are used synonymously, and it means your money in. Of course, we all know about expenses because as business owners, we're always watching our expenses, and expenses is the money out. What did I spend to obtain something for my business? And you have your net profit, and then you get to the bottom, which is your net profit or your net loss. You have a profit if you brought in more money than the money you spent out, and you have a net loss if you spent more money than what you brought in. Okay, I'm gonna, just to give you a better example, I am going to just use a simple example of a catering business just to really ring this home for you. So say, for example, you have a catering business and you catered about 20 events at an average of $2,500 per event. So that would give you about $50,000. Fair enough? So then you have some expenses, and the expenses for the catering business are the costs incurred to generate the revenue. So what did you have to do in order to set up this catering event? You had to pay your staff, you had to purchase some inventory, you had to maybe travel to the event that you're catering. So those are all costs associated with the catering event. And say those costs is about $35,000. So you brought in $50,000 and you spent about $35,000 in order to make these catering events happen. So now you have $15,000 left over. Your $50,000 in, your $35,000 out gives you $15,000 in. So at this case, I would say to you, congratulations, you had a profitable quarter of $15,000. So let's keep moving, and now we'll say, why do you need a P&L statement and what is it used for? P&L statements are generally used for data-driven decisions. It says, I'm running a catering event. Is this event profitable? Am I charging enough for this event at the end of the day? Should I, if at the end of the event and you're ending up with a negative or a net loss, then it gives you the opportunity to make different decisions about the catering. Maybe you can try to find a cheaper way to get to the event, or maybe the items that you're purchasing for the event, you can try to find that at less cost, or maybe you might want to raise your prices. You're not charging enough because you're not making a profit off of that business. So those are the reasons why it is important for you to look at your P&L statement at the end of transactions, or quarterly or monthly, whatever it is you have an appetite to digest, but don't ignore your profit and loss statement. We now move on to my favorite statement, which is the statement of cash flows. And this is the statement that is least talked about, but in my view, it is the most important statement, and that's just my view, okay? So, and I'll show you what a typical cash flow statement looks like. It has your operating expenses on your operating at the top mean money in and out for operating. Then it's split into investing, and it shows your financing activities. And I will explain those to you a little more later. Okay. So here we are. When you think of, and if you've noticed, the balance sheet had 3 sections, the income statement had 3 sections, and the statement of cash flow has 3 sections as well. The operating, says, what is the money used for in the operating expenses of the business? And I go back to the catering business example that I just used. Operating expenses would be those expenses that you incurred to make the event happen, okay? Then the next section of your cash flow will be your investing section. And it says, what is the money used for in investing in my business? You have a catering business, you bought a van, so you can transport the events back and forth. That would be considered an investing activity. I have a desk, I have a computer, I have a microphone. Those are things that I purchased to keep my business running, and it's not turned over. I keep those things. So that's what's considered an investing activity for your business. And then financing activity is generally if you have a loan against your business, anything that you've incurred an expense to keep your business moving along, meaning a different type of expense, meaning that I went to the bank and I borrowed money from the bank to maybe buy a building or maybe build out the kitchen as in the catering business, etc. Okay, so I want to play a game with you right now, and it's going to be the game of cash flow chaos. I am going to pull the information for the game up just a second. Okay, so I am going to ask you, and you'll tell me if it's a cash inflow or if it's a cash outflow. A client pays their invoice. What is that considered?
They pay an invoice?
Yes, the client pays the invoice, not you. The client paid you. What is that considered? Cash inflow or cash outflow? It's money coming into you. That's right. So it's a cash inflow. Okay, now you've purchased a piece of equipment in your business. What is that considered? Inflow or outflow? Nicole?
Is it an outflow?
Absolutely, yes, you got it. That's money going out. And last, this one is a little tricky, so listen carefully. You take out a loan to cover expenses in your business. What is that considered? Cash inflow or cash outflow? If you took out a loan in your business, that's cash inflow. You got money into your business. You got an influx of cash into your business. So that's considered cash inflow. Even though you owe that later on, you got money in. Just think of it as simple transaction. Did I get money or did I give money? That's how you consider your inflows and your outflows. Okay. As an entrepreneur, monitoring your cash flow is crucial to ensure you have enough cash on hand to meet your financial obligations and invest in growth opportunities. If you're by regularly reviewing your cash flow statement, you can identify potential cash shortages before they become a problem, and you can take proactive steps to address them. Okay, my mouse is somewhere. Let's see. Okay. So now, how do all of these statements connect? Okay, we're going to take the 3 individual statements we discussed, and we're going to see how do they connect. So you think of your financial statements as puzzle pieces that fit together to create a complete picture of your business financial health. The profit and loss statement shows your profitability, which impacts your balance sheet because the income from your profit and loss statement is what flows into the equity section of your balance sheet. And it say, for example, you decide, you know what, I am going to sell my business tomorrow. They always look at that equity section to see how much equity do you have in your business. Think of it as your home. You purchase your home and as you pay down your mortgage, you build equity into your home, right? So now when people say your home has equity in it, it means that based on how much you sell your house for, you can walk away with some money. That's similar to the equity section on the balance sheet, or that's the simplest way I can think right now to explain that for you. And then your cash flow statement, that reconciles your net income from the P&L statement with actual cash available on your balance sheet. So the cash flow statement, it gives you a nice snapshot of how money comes in and how money goes out. So when you look at your net cash flow statement, that should be the same amount of money that you have on the balance sheet section in the assets section that says cash. Okay. Does that make sense? Okay. So before we get into the key takeaways and the Q&As, I also wanted to give you a small quiz on the balance sheet. And I want you to tell me, I'm going to give you an example, and you're going to tell me if this is a asset, if it's a liability, or if it's considered part of your equity. Okay. So I have $10,000 in the bank. What is that considered on my balance sheet? Is that an asset for me? Is that a liability, or is that an equity? Anyone? You can put it in the chat also if you don't want us to yell it out. Absolutely. You are so correct. Cash is considered an asset. That's something you own. If you remember when we talked about the balance sheet, and if I go back to that page here, we said an asset is what you own. So that's your cash that you have in your business. Okay, now let's talk about a liability. Say, for example, I took out a loan to purchase equipment. What is that loan considered? Is it a liability? Is it an asset? Or is it an equity?
Liability.
A liability. Yes, it is, because it's something you owe. The equipment you purchase will be considered an asset because you own that asset, but you have a loan, so that's something you owe. Now, the money you invested in to start your business, what is that considered? Is that considered an asset, a liability, or equity? The money you invested into your business when you were starting up. You said, I'm going to put $10,000 in my business to start my business. What is that considered? That is your equity. That's money you put in to start your business. Any cash you infuse in your business from your personal accounts, or maybe from an aunt or a generous uncle, that's considered equity in your business. Okay. So let's go to key takeaways and questions. And now is the time for the most valuable part of our session, your questions. I want to open the chat for any questions that you may have on anything that was discussed, anything that you are not clear about. I'm happy to go over that with you right now. So start putting your questions in the chat. Karen, if there are questions, can you read them out for me? Because I can't see the chat right now.
Yeah, no, I don't see any questions at the moment. Um, Yeah, so Nicole says she doesn't have any questions.
Okay.
Like one of the things that I tell my coaching clients is like I equate a financial expert like yourself to going to the eye doctor. Like I take it from a holistic perspective. We do general wellness every year, our physical, and that's like going to your general doctor is like going to your insurance company to make sure that you're covered from an insurance perspective once a year if there's any changes. And seeing somebody like yourself is a twice a year, like the eye doctor or like the dentist, right? So it's kind of like you have
Yes.
to make sure you're doing that at minimum twice a year, meeting with somebody like yourself to review your books. And I'm like, there's always three ways you are, say yourself, where you're doing your own books because you're qualified, or you have somebody else do it 100%, or you do the hybrid where they help you get set up and they monitor it and ask, you can ask questions too, but you have to have somebody of your caliber that you're partnered with, even if it's to help you make sure you're getting your book set up properly, right? And to ask questions. So I guess my question for you is like, what's the number one question you get asked by like meeting with somebody the first time? Like, what is kind of their biggest, like, is there a fear they have? Is it something that they're uncertain about? Like, what is it that they ask you first off?
That's a great question. And you are correct. At least, I didn't want to equate myself to a doctor, but I'm glad that you said it because I was really, I wanted to say it, but, I didn't want to come off a little arrogant or anything, right? Because it's not life or death in that sense. But thanks for that analogy. One of the most popular questions that two, actually two that I do receive is, um, people often says, I don't like numbers. I don't like numbers. And I was like, well, you're in business. It's like me saying I don't like sales, right? Because if you don't sell, you don't eat.
Yeah.
So, I mean, and no one's expecting you to know the numbers and know everything about the numbers. As you say, that's why there are people like me who exist.
Yeah.
But it's just getting comfortable with some of the jargon around your financial statements, just understanding that if I, what it means when I bring money in, what it means when I owe someone, because sometimes people say, oh, I have money in the bank. And yes, you have money in the bank, but if I look at your financials, you have $50,000 in the bank, but you also have a payable to Johnny Mr. Invoice for 75,000. So now you're running at a loss or at a deficit. And because you're not paying attention to your numbers, you think you have money in the bank, you think you have 50,000 in the bank. But if Mr. Invoice comes and says, pay me today, you're even short on paying him because you really don't have enough money in the bank. So just being able to understand the basics of, okay, I may have money in the bank, but if I look at my balance sheet, it says that I owe Johnny Mr. Invoice. So I really don't have money in the bank. Your profit and loss statement helps you evaluate, am I charging enough for my services? I might be going out there and working really hard. It's my passion. I love doing this, going back to the catering. I love to see the happy faces when I make all the fun foods for people to eat. But I'm working this hard and I'm operating at a loss, which means there is no money left for you at the end of the day, even though you've worked so hard and you've brought so much joy and happiness to everyone's heart and stomach. There's nothing left for you because
Right.
you are not paying attention to your financials and really knowing and understanding your numbers.
Okay.
And it's important to have a relationship with an accountant that you can call them, call them and just have conversations with them. Most accountants that I know are not judgmental because we understand this is a very technical area. And just like I can't come in and pick a color for this room, someone else has to kind of give me the vision for the color that the room should be in, where the table makes sense and what's the best lighting. It's the same thing. We don't expect you to know everything about your finances. That's why we're here.
Awesome. So Nicole has a question. She says, what is the outcome of meeting with a financial advisor? Wondering if it would help decide on pricing structure.
So a financial advisor is someone who talks to you more about your retirement planning and how you can use the profits in your business to best set up your exit plan for the future when you're not there. A CPA or an accountant is the person you might be referring more to in that question, Nicole. And they're being able to sit with you and create for you, find out what your vision and your dreams are for your business and help create for you the structure of pricing, help you with research, right? Because in order to come up with pricing, we can't just pull pricing from the sky. We have to really make sure it's something that the market will accept. So they will sit with you, have a strategy call, and they'll ask certain questions about what are your goals, what are your plans for your business, what is your niche, who are you catering to, what have you charged before, and they'll help you crunch the numbers just to see if are you being profitable and help you understand what percentage points should you increase your prices are. If you say you're charging $1,500 for a small catering service, maybe you might want to increase it to $1,700 at first just to see what the market is. Because if you jump out there and say from 1,500 to 2,000, your customers might be like, whoa, wait a minute, you know? So they help you to gradually increase the pricing and also help strategize with you to see where can I cut costs? Because sometimes your pricing might be right, but your costs, the things you're purchasing for the business might be too expensive or might be unnecessary purchases that you're making. So they do help you to kind of play with those numbers and strategize on where the movement should be. Should you move up in pricing? Should you cut costs, etc.? Hope that helps, answers your question.
Thank you. That's very helpful.
You're welcome. Any other questions?
I don't think so. I think I'm good. This was very helpful. It was good.
I'm
It was
glad
really
you
good.
found it helpful.
Yeah.
I wanted to share this with everyone. I have a QR code if you wanted to follow me on Facebook, LinkedIn, Instagram. You can scan the QR code and it will share more about me. It will some of my services that I also offer. And you know, Karen, I just want to say this was an incredible session. I've been so impressed by your engagement, the insightful questions, the lovely takeaways that you guys have had. You know, and I want you to give yourself some heart emojis again as you know, as we round up. And you know, you have made the decision. The fact that you're here today means that you've made the decision that you want to understand your numbers better. You know, so I want you to say, remember, understanding and utilizing these very basic accounting principles that I've shared with you is very essential for you as an entrepreneur. And by regularly reviewing and analyzing your balance sheet, your P&L statement, and your cash flow statement, you'll be better equipped to make those data-driven decisions and to successfully manage your finances. I don't expect you to look at them every month, especially if it's something you have not been doing before, but schedule every quarter or every 6 months. As Karen said, you schedule the doctor's appointment, you schedule everything else, schedule this in and put it on your calendar. I am going to contact my accountant every 6 months and just sit down and let them know where you are, because people are always very interested and says, I want to save in taxes. I want to save in taxes. Not understanding that you can only save in taxes if your books are good, if your books are accurate. That's only how you can save in taxes, because if you wait until the end of the year, guess what? It's too late. Things have already happened. There's no course correct until you're into a new year. And I did say I have a gift for you if you stayed until the end. So in the chat, I'm going to ask Michelle to put the link in the chat. And I do have a financial scorecard for you. If you click on the link, it will take you there to get your free copy of the financial scorecard. I hope you find it helpful and use it. As you know, you can make copies and reuse it just to give you, it's more of a summary of everything that we spoke about today. And there's also a small quiz that you can take to see where you are where your business is in its financial health at this point in time. Anything else?
No, I think that was great. Thank you so much, Sharon. This was amazing and a lot of value. Very, very, very helpful.
That's very much
I'm
so. Thank you, Sharon, for your time.
Yes.
You are so very welcome, guys. The pleasure was all mine. I love to talk about this stuff, as you know. So I thoroughly enjoyed my time here with you today. And Karen, again, thank you for your vision for bringing this to your Facebook group audience. And guys, if go out and say hashtag savvy, what is it, Karen? Savvy
Get
women or
savvy.
savvy
Yep.
entrepreneur? Just savvy? Yeah,
Yep.
do hashtag savvy. And let your friends know that you've attended this webinar today. You've had some great value, and this is a really great Facebook group to be a part of.
Thank you. Yeah, I'm excited. I think the feedback on this for sure. As my dog wants to participate and say, yes, she agrees. You're fine, sweetheart. Oh my gosh. But yeah, so thank you, Sharon, so much. And it takes, by the time I get the link, I should be able to share this into the Facebook group likely by Saturday or Sunday, but Sharon, I should have it to you hopefully by the end of today or tomorrow at least. So you have a copy of it for your use as well. But thank you for everybody that is here live with us and anybody that's watching the replay. I think you'll agree you're going to get a lot. So thank you.
Thanks for setting it up, Karen.
You're welcome. So I think we are likely good. I appreciate all of you and thanks for all being here.
Thank you so much.
Bye-bye.
Okay. Yeah.
Bye.
Bye-bye.